Man, relax. What
Oh,
up? What up? What up? Hey guys, I'm back. It's your resident online mortgage lender, Robert Lewis. Y'all know the number, NMLS license number 180100. And we're back. We're talking today about a new topic, probably to a lot of folks. It seems old to me, Jerry, because I've been doing this a long time.
yeah.
It probably seems old to you even now with the number of applications that you're taking now. But we're talking credit, right?
hmm
And how much? I think that's how you poised the question from one of your applicants. But how much credit does one need to buy a home? Is that accurate?
Yep. That was the question.
Yeah, yeah, yeah. And for those that don't know, you're used to either me coming on or some other folks, but we got a new face on the stream that's gonna be here more regularly. And this is why, okay? Jerry, in life, when you try some things, right? It's good to try things, right?
Yeah.
And if they don't work, what do?
Move on.
Yeah, you try something new, right?
Yeah.
So we I'm not gonna say we moved on, but the way I look at things, I kind of try to tailor things based upon the situation or the environment that we're in, right?
Yeah.
So over the last couple of years, there was a lot of folks at home because of the demi going on and a lot of
hmm
fear and things of that nature. So we were trying to speak to folks in that vein, if that makes sense, right?
Yeah.
Now we strictly on our business. We on our square, man. We just talking about what folks need to do to secure residential real estate. Is that something that's important to you, man? Residential real estate?
Yeah. Very. I would say it's one of the most important things. It's not just to me, but to a lot of people out there. And then there's a lot of people that don't know the power of residential real estate that can
Uh-huh.
really help them. And that's what we're here to do. We're here to educate folks that don't know uh, how powerful residential real estate could be.
No doubt, no doubt. Now let me ask, man. I'm all about you being yourself, but you gonna give me that sophisticated voice the whole time, or you gonna loosen up a little bit? I'm just
Nah,
saying.
yeah, I had to bring it out at least once,
I
man.
hear you, man. I hear you. You the Hispanic Barry White over there, baby. I feel you. I
Yeah,
feel you. But you know what, man? All joking aside, let's do this, man. Let's do this. Um, I always like to invite anybody that's watching to go ahead and, if you want to, ask any questions, make any comments that you want to make. Again, we know the times have changed. Folks are back to work now, right? So
mhm,
we're not expecting a lot of people on at 1 o'clock. This is what we do, but we know you probably at work. So this is the beauty of the technology because you can watch it on demand. Okay.
yeah,
And we guarantee we're going to give you some valuable points, things that you could work on, especially if you're new and you don't really understand these things. Those of you that think you might know, I want you to listen again because I'm going to show you some data that shows, Jerry, that folks really still don't have this credit piece in place, right?
yeah,
So again, if you want us to acknowledge you and know who you are, you have to give the software the authorization to see your profile. That's it. That's the only thing it'll see. Or you could just be anonymous and won't answer the question. Lastly, you can follow us, right? By subscribing at LEND, the number 2 USA on all the platforms. And then if you want to follow my man Jerry, right? Because he's a part of the team. I'm telling y'all now, man, show him some love. Let's put them up on the screen. This is the Instagram. This is probably the best place, right, Jerry?
yeah.
Yeah, got a lot of great content out here, and most importantly, uh, we want you to schedule a time to have a conversation with them if you feel like you're ready to take that step to home ownership. Hey, Jerry, before we get started, I got a new
mhm,
acronym, right? I call it AAD, right?
Okay,
So we want them to call you so you can assess where they really are, right?
okay,
Because we've learned that we just don't want to take applications. Okay.
yeah. It
We
could
don't want
be.
to waste your time nor ours, right?
Mhm,
So the 30-minute phone call is very important so we can assess where you are. Then if you need to, we can address issues that may need to be addressed. Does that make sense,
Yeah,
Jerry? That's the
mhm,
second A, right? And then the D, I said the AD, right? Then
yeah,
we could direct you to a realtor, somebody that we know, like, and trust that could get the job done for you, or you're ready to progress and go to the next step and actually start shopping for a home because we guarantee you that you will be properly qualified. So Reach out to him. I'm gonna put it out here again. That's his Instagram. Go ahead and shout that out, Jerry. What's the Instagram title?
My name is Gerardo Garcia .co.
Geraldo Garcia. Yeah, I got that. Yeah, roll that R. .co. Okay, reach out to him, hit the link, and schedule a call. So, you know what, Jerry? Let me ask you, man. You brand new, right?
Yeah.
You new in the game, and I wanted to get your honest opinion because a lot of times people think I'm saying the same thing. But what say you, man? What shoot? I think you've had what about 17 applications already? Easy.
Yeah.
Uh, what do you think the number one problem or challenge those 17 applications have had since you've been in the game? What would you say the
Ooh,
number one thing is?
that's an easy one. That's has to be people not turning in their proper documentations.
Documentation.
Biggest
Okay.
issue. Yeah.
That's
Because
a
without
big
the
issue.
documents, we can't move forward on anything. Can't even. It's part of the application. So if we don't have that, your application's automatically incomplete.
And I've been shouting that from the mountaintop. But again, really 2 months in the business, right?
Yeah.
And you see that as a challenge with people, right?
Yeah.
So that's something that we're going to come back, not this week, maybe next week. We'll hit that to try to give some clues and some tips and some strategies for folks to be prepared for when they have that strategy call with you to assess where they are. Because without the documentation, as you said, we can't make a decision. No lender can, right?
Yeah.
What would you say another common theme is with some of the applicants that you've had?
Uh, let's see. Another big issue is people's credit score because a lot of folks are reaching out, and sometimes they're applying, but they don't meet the credit score requirement for them to actually qualify for the different types of loans that we offer.
Got you. So it's crazy. The more things change, the more things stay the same. So
Yeah.
uh, I appreciate you sharing that with me. So per the title, and I listed it how a lot of people kind of search online, but how much credit do I need? How much credit do I need in order to qualify for a home loan? So have you done any research on that question, man,
I
before I
have.
jump in?
I
Yeah.
have. I have.
Go ahead. And I want to hear it from the young man. Tell me what say you on that question?
Okay, so it depends on the well, not really, because everybody's situation, the first thing that they should do is apply. Because without applying, we can't take a look at their situation and what their credit scores are, what the different types of loans that they qualify for. So right off the bat, the easiest type of loan that the majority of people are going to qualify for is an FHA loan. And with an FHA loan, the minimum credit score requirement is going to be a 580 to a 619, I believe it is. And so the FHA is great for two things. One, you don't have to have a perfect credit score to purchase a house. It allows you that cushion to have a lower credit score but still be able to purchase. And second of all, I forgot my train of thought. I was
Yeah,
on track. I forgot my train of thought.
it's all good. Let me jump in there and help you, man. Because again, man, this not the SAT. So I know it's your first time live, but it's just you and I talking,
Yeah.
right? And my audience knows that nobody's gonna come before them that's not vetted, that's not a person of integrity. Let me put that
Mhm.
first. A person of integrity, somebody that cares about the folks that they're working with, right? We don't have commission breath over here. So you just relax. Again, the more we do it, the more you're going to be comfortable, right? So
Mhm.
so let Rob help you out because you're right, but I want to go a little further into the FHA because I'm glad you started there, right? So
Okay.
technically, theoretically, you can have as low as a 500 middle score for an FHA loan, right? So from 500 to a 579, a client would have to minimum down payment is 10% plus your closing costs.
Yeah.
Now, to your point, there's not a lot of people. I would say it's less than 2% of the people that fall within that credit range are actually going to be in a position to qualify for the loan. But theoretically, 500 to 579. Now, to your point, I like where you started, 580 to 619. There's a lot of people that possibly live there,
Mm-hmm.
and you can actually close and fund, get the keys to that loan if you meet some criteria, right?
Yeah.
But the thing is, in that area, you need to know as a client that you don't have excellent credit. That's the first thing you need to wrap your mind around, right? Number two, there are going to be some additional requirements that you have to meet, not because we as lenders want to make it hard for you, but it's because of your specific scenario. Okay. So
Mhm.
you have to have that mindset, meaning interest rates are going to be higher, meaning you have to have some reserves after closing costs and things of that nature,
Yeah.
right? Meaning you're not going to qualify for all of the potential programs that are out there because your credit is challenged. Does that make sense, Jerry?
Yes.
Yeah. So 580, 619. Okay. Those are the things to expect. Now, from a 620 up, well, no, I ain't gonna say that. From a 620 to a 640, you still have some challenges,
Mhm.
but things loosen up for you a little bit, okay? And you don't have to necessarily have as many reserves left over, and there's not as much documentation, but rates are still going to be higher. It's not until Jerry, really folks get over a 700. We have to start changing the mindset and the conversation that really anything under 679, that's subpar credit.
Yeah.
Okay. Now, you don't have to judge yourself because of that, but we're here to really tell people the truth, right?
Yeah.
Yeah, yeah, yeah. So that was FHA, okay? Credit requirements for different types of loans. Have you done any research on conventional VA or USDA or no?
Yes.
So let's go VA next. What did you find out with VA?
Oh, not so much on the VA type because again, haven't had many clients that are military folks that are actually gonna be using VA. So you might want to take over for the VA, and then I'll
Okay.
cover.
I'll hit the VA. So what? Conventional?
Yeah, I'll cover conventional.
Okay, go ahead.
Okay, so with the conventional loan, you're looking about a credit score requirement of 620 and up is where that conventional type loan you're going to be able to qualify for. And so with the conventional loan, you can go a little bit lower on the down payment to a 3% if you choose, or if your lender
If you're a first time home buyer,
yeah, if you're a first time homebuyer, you can
there
hit
you
that
go.
3%. But
Mhm.
other than that, if you're like buying a second property or making it your primary residence, you'll have to put down a 5% as your down payment.
Minimum, right? So
Yeah.
those are the minimum requirements. So another thing too, Jerry. I'm sorry, Jerry.
No, we good.
I'm always shortening people's name, but another thing, Jerry, is this man with the conventionals,
Hmm.
right? For especially not even first time home buyers, but anybody who's going to use that conventional product, even subsequent buyers. It's something called the area median income. And on the conventional loans, remember we have two entities: Fannie Mae, Freddie Mac.
Yeah.
And so if you're a first time home buyer and you fall at or beneath 80% of the annual median income for wherever you are, then that product is a great product because you could either do a home ready or a home possible loan. Those loans are designed for people that, first time home buyers or don't have a lot of down payment. And the biggest benefit to those things is that the private mortgage insurance is going to be discounted.
Okay.
So if you make more than or above the 80% AMI of the area, then your private mortgage insurance is going to be at the 35% calculation. And to be honest with you, if you don't have a high credit score, high like what, over a 700, I would say worst case 680 and higher qualification score,
Hmm.
your private mortgage insurance in a lot of those cases are going to be sky high. So what I'm saying is, if you're less than a 680, you want to have your lender kind of look at it, give you those options. But I say if you're less than a 680, more than likely I would switch you over to a FHA loan
Hmm.
because the mortgage insurance premiums, same thing with private mortgage insurance, is not going to be factored on your credit score. It's going to be factored on the loan to value, meaning you can have an 800 credit score, you put 3.5% down with FHA, your mortgage insurance premium, the annual or the monthly version is going to be at 0.85% for everybody. Does that make sense?
Yeah.
Yeah, 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 yeah. So excellent, man. Excellent. So FHA, conventional. Like you said, I'll hit VA. VA, if you didn't know, Jerry, and you're going to run into these, VA is the best loan out here, man. And here's why: 100% of the sales price that you can finance. Okay. And there's no private mortgage insurance, period.
Okay.
Okay. That's what makes it the best thing out here. And the rates typically on any government insured loan, anything ending in an A, right? FHA, VA, USDA. We the people, even you, we we underwrite, or we finance those loans, and that if they default, we pay it back, right?
Yeah.
So that's why I try to tell people on a side, Jerry, you need to hurry up. We got to hurry up and get you in a house, because you paying for houses anyway. You're not benefiting from it, right?
Yeah.
So, but VA, technically, you can go down to really VA on the guidelines. There is no credit score, but the way it works is lenders that VA, FHA, or USDA is going to insure. They insure lenders that make these loans that if someone defaults, a certain percentage will be paid back. That's how it works, right?
Okay. Yeah.
So lenders come and put their overlays on it. So I've done a VA loan, several, with folks as low as a 500 middle score. But again, I don't want the flood lines to come in, because we're raising the IQ and the credit level of those that are watching, because you can't keep living in 500 credit scores. Everything you pay is going to be expensive, right?
Yeah.
So and those folks that I have been able to close over the years have very unique circumstances that pertain to like a medical situation where maybe a spouse or someone died unexpectedly and put somebody in those in position. Everything else, it's not going to work. So really, same thing with VA. I would start saying 580 and up is where you're going to not have a lot of problems. But again, anything under a 680, expect higher rates and more hoops possibly to jump through. And it's not our fault. And it's back to that first point that you mentioned in your 2-year career thus far. The number one issue that you find with clients is their lack of what?
The lack of credit score, and then the lack of
knowing what the documents are.
Yeah.
Is that what you said?
Yeah. Documents.
Yeah. Right. So, hey guys, this is why we're going to start coming on, and you could run around the world ad nauseum. If you really want to know how to secure real estate and do it the right way and have the best experience that you possibly can have, you want to get with us and our team, or listen to folks like us that are telling you the truth. And so just real quick as an aside, what documentation? Your 2 most recent pay stubs, the full description of the pay stubs, your tax returns, I would say for the most recent 3 years, because we're kind of in that limbo period, all pages, all schedules, right? The corresponding W-2s and or 1099s if you're a business owner, right? Your driver's license, social security card, and whatever asset statement you're going to use. Those are the minimum things that a lender will actually need, Jerry, as you well know, because we've gone through it ad nauseum, right?
Yeah.
To make the decision. And that's another point before I move on this section. That's why we want you to reach out, man, and have this conversation, right? Have this, what do you call it, man? A home buying consultation? What kind of call is that?
It's a home buying consultation. So we just basically run down through your situation, ask you a couple questions, get to know you and what you want to do pertaining to purchasing residential real estate.
And with me, guys, you know, you can reach out to the, 210-570-6382. I don't need Calendly to do that for me anymore. You just call me. Anybody knows me, we gonna chop it up. And here's the deal. We want to start having that call so we can AAD, right? We need to assess where you really are. I don't want to take an application for you if you're going to go to a new home builder. When you call, I'll explain to you why. And I'm going to give you a little bit of my time. And this is just a PSA because some of you guys are line steppers out here, right? And I want my young bull to understand we don't want to let nobody, he's giving you 30 minutes. So when you come to the call for 30 minutes, be prepared. And if you tell us you're going to a new home builder, we're going to tell you to go to the new home builder and let the new home builder's lender qualify you, because that's where most of you are going to end up because you think they're giving you something for free. Now, if you went over there and you say, hey, I want a second opinion, you come back to us with the CD or the loan estimate. And Jerry, we're going to tell them real quick if we can help or not, right?
Yeah.
Yeah, because we come from the abundance mindset. What's for us is for us, right, Jerry?
Yeah.
and we're very selective, aren't we, Jerry?
Yeah.
Because we're very busy and blessed over here, aren't we, Jerry?
Yeah.
Even you at 2 months. So there's enough for everybody. So what I'm saying, guys, is respect the time, okay? And if you're serious, and the reason we come on with these videos is so you can learn to know, like, and trust us as much as you can and understand what our character is. But the number one thing that we hate is wasting time, because that's our most valuable resource,
Yeah.
right? So those are the minimum documents, right? We went over the 10,000-foot view of the credit scores and the that one would need for the different loan types. Let's talk a little bit about this, Jerry. Installment loans versus revolving loans, right? Or revolving lines of credit, not loans. So, and I want you to talk to me just from your knowledge where you are now, because there's a reason I'm here. Because I want people to know and understand that you can grow, right?
Yeah.
We're not on here putting on a facade. And again, guys, reach out to him because he's on the team. I'm on the team. You feel me? And we got other people on the team that you don't see, but we strong over here. So with that, you can learn as well as he is, and while he's learning, right? So talk to me about your understanding of installment credit lines and revolving credit lines.
Okay. So from what I understand, installment credit lines are credit lines uh, that things like your car, like your car loan, your mortgage loan, things that any type of loan really, that once you pay off, you no longer have to pay off monthly. It ends at a certain point. And my understanding of revolving credit are things such as your credit card, that you can, it keeps coming around every month. Every month you get a bill due for your credit card, and you pay that every month as long as you keep using your credit card. And that's a little bit of my understanding between installment versus revolving credit, and
That's
both are very important.
and that's a perfect understanding, man. It's just that simple, right?
Yeah.
Let me ask you this: why then, from your example, and car, we'll use a car loan and a credit card, right? So let's say my car loan, I paid it off last month. What's going to happen to that trade line again?
It's gonna close.
It's going to close. So why then are revolving lines of credit important? Because in the same month, I had $1,000 credit limit, and I had $200 on the credit card, and I paid that balance off. What's going to happen with that revolving line of credit?
It's gonna
Does it close?
No, it's gonna stay open and keep coming around as long
So
as you
that's why it's very important, right? Because revolving lines of credit always report to where, as an installment loan, once you paid it off, all your good payment history doesn't go away, but monthly, from a creditor or a lender's perspective, there's no way to gauge how you're handling credit.
Yeah.
So that's why revolving lines of credit are very important, or credit cards. And there's a lot of folks, especially in some of our communities, right, that don't believe in credit cards.
Yeah.
Right. And we are having to explain to them the reason why. So let me add a little bit to that, especially for those folks that are real conservative and say, I don't want credit. Right. Well, a lot of people don't realize, Jerry, is that you don't have to use the credit. So what we like to teach people is this: use the credit card for the things that you normally pay for in everyday life, like gas.
Yeah.
Right. And then what I do, I pay credit card balances. I use one, American Express, and I pay it off every week. Okay. Because you got to be in the game. It's very important, because this is how we establish good credit scores, good credit behavior, by showing everybody that looks at a credit report, or a lender, when they go to look at a credit report and they say, you know what, this trade line, he had this car loan open for 3 years, never missed a payment, but it's paid off. That's a good thing. And he's also had a credit card for 3 years. And not only has he never missed a payment, but his utilization has never been too high, because there's something called revolvers and transactors. Okay. And a revolver, let me ask you this. If I came to you, right, and said, I filled out an application, say, you're the bank, Jerry, you're the bank now, you big bank Hank, you in the money, and I want to borrow $1 million, and my income checks and everything checks, but you look at my credit report and say I got 30 credit cards. Let's say I got $1 million worth of revolving credit, and all of my balances are capped at $1 million. Now, I never missed a payment, but all of the available credit is utilized. Would you feel comfortable lending me $1 million?
No.
Why?
Because what shows me that once you use that money, you're gonna have money to pay me back?
Capacity or cash flow, right? Or in other words, would you say this: if one thing goes wrong, the chances of you getting your money back goes down a lot, right?
Yeah.
Because I'm stretched real thin.
Mm-hmm.
So that's the concept, right? That's the concept, guys. And you explained it perfectly. Again, that's why I want, and we're going to start coming on. And as your acumen grows, people can see that it's not rocket science. A lot of times we make it harder than what we need to make it. Make
Yeah.
sense?
True. 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 True.
Got you. Now, how to build credit. A lot of people want to know how to build credit because we make this thing just so hard, right?
Yeah.
So, what do you know about building credit, if anything, man?
Uh, there's only I don't know. I think from in my opinion, the easiest way to build credit is to get a secured credit card. Or if not, if you have a car payment, if you already have a car, you have car payment, keep paying your monthly payment, but on time. Don't be reckless with it. But the second best thing is to get a secured credit card, and that's my opinion on it. Because with the secured credit card, you let's say you decide to get a secured credit card, you go
Mhm.
to uh,
Name any bank.
Bank of America. You get a secured credit card with Bank of America.
Mm-hmm.
You have to deposit a certain amount of money for you to get that in credit. And then, all right, let's say I open a secured credit card, $200. I put $200 in. I have $200 worth of credit in that account, uh, and then I just keep using. I don't not I wouldn't use a lot of what's available to me, but
Mm-hmm.
use a certain amount every month, pay it back every month on time, and just keep doing that over the month. And then over a 6 month period, you have a credit score available to you.
There you go, man. And that's for folks that just don't have any access. That's a way to start, right?
Hmm.
Here's a couple of other ways. Utilize your family, especially
Yeah.
if you're a younger person like yourself.
Hmm.
Your mom and dad probably have had a credit card, and not only have one, they've had it open for a long time, because that's really the recipe. You to establish to have a mature trade line, be it
Hmm.
installment or revolving, it needs to be open at least 6 months, right?
Hmm.
But when it becomes 2 years or older, it's grown, it's seasoned.
Yeah.
You see what I'm saying?
Yeah.
So, what a lot of people don't realize, and what you said is, or what I heard you say is, it takes time. How much time? 2 years,
Hmm.
right? Because if I really want to get to know you, Jerry, I got to watch you, man,
Yeah.
right? And one thing with this internet and the times that we live in now, you know and understand, everybody wants it what?
Fast
Now,
now.
right? And
Yeah.
the internet kind of, you got people out here to tell you what you want to hear. Okay.
Hmm.
But the truth of the matter is, a mature trade line is 2 years old. And you hit it on the head, at least 6 months is where you want to be. Okay.
Hmm.
That's starting off. But you can be an authorized user, mom and dad's account if they have good credit. Okay. Then, like you said, you can apply for a secure credit card. A lot of your cohort folks that you know, because you just graduated,
Hmm.
there's a couple of great college student credit cards that they'll just give you.
Yeah.
But you got to understand, because I heard you say don't use it
Everything
all.
has a price.
Right. Well, and it has a price, but you got to understand the price with a lot of folks is their behaviors aren't there. And I
Hmm.
just heard you say, hey, just use a little bit, pay it off, right?
Yeah.
So you got to know and understand, if you borrow it, you have to pay it back. So that's the key. 10,000 foot view on how building credit. Again, anybody that's watching, if you want to go deeper, right, as far as how to build credit, we're not a credit building channel, but credit is a big part of you leveraging borrowing money to get a home.
Hmm.
So there are some things that we have in place. Again, that's why that consultation call is very important, right? So let's move on, Jared. Let's move on. We doing you good, man? You
Yeah.
breathing?
I'm
See,
good. I'm good. I'm
told you ain't gonna die, man.
good. Nah.
Uh, so actually, you know what? Let me get off of this one and put on here. When should you consider credit repair? Let me handle this one, Jerry.
Okay.
Here's the deal, guys. That's a personal decision. What I would say is this: there's nobody that is going to be able to change the effects of your behavior, because credit and the credit score is nothing more than a reflection of how you've lived your credit life. Okay.
Hmm.
So if you've had some if you're busy and you need somebody to kind of heavy lift for you, by all means, again, that's a personal thing that you need to do. We don't do credit repair. If there's a couple of things that you need to tweak after filling out an application and submitting all the documentation, there's some things that we have in place that can help you, maybe get from in the 620s to a 680 and change your rates and pricings and options that you might have. But that could be done. It's called a rapid rescore. All lenders or most lenders should have it. And if you have the ability to do it, it's nothing that's proprietary to us. Because that's another thing that happens out here on the internet, man. People try to act like they got something that everybody else doesn't have. Not true.
Yeah.
Right? So if that's something that you want to do, holler at us. But here's the biggest thing, what I would tell people to do, Jerry, on that. It's called the CFPB. Have you ever heard of CFPB, Jerry?
I think a few times.
Okay. It's in here. It's not a test, but what I'm going to do is let's do the picture in picture. There you go. It's called the Consumer Financial Protection Bureau. That is a government entity that's for we the people, and it has a plethora of information. And one of the topics that it's real big on is credit, right?
Yeah.
So there's a section in here that deals with credit repair. And so I would advise that if you feel like you need some credit restoration or credit repair, instead of paying somebody over and over and over again, and you really are ready to change your behaviors, do some research, understand what credit is, rewatch this video because we really hit it in the head to begin with, and go from there. Make sense, Jerry?
Yep.
Makes sense. So watch this, man. Watch this as we round up. Because see, I told you, man, we'll be on here an hour. We're already 30 minutes.
Yeah.
So you think it's going to take long. We'll be on here 2 hours. So let me ask you this, Jerry. Do you know the factors that are used to calculate the credit score? Do you know what those factors are?
Yeah.
Okay. What are they?
First one's gonna be your payment history. It's a big one. Let me just go over all five. It's gonna be your payment history, the amount you owe, the length of your credit history, new credit, and then the types of credit.
Okay. So payment history, the amount you owe, new credit, and what else? Payment history, the amount you owe, new credit,
and the types of credit.
The types of credit, right? Revolving installment, and then how do you use it? The utilization.
Yeah.
Right. Those are the 5 factors. Right. So again, guys, once you get a installment account, most people are gonna have student loans, car loans. Those are installment accounts, right? You only need one credit card. Trust me, I had one for years, and my credit is great. I'm just put on there because I don't want to give anybody a complex, right?
Yeah.
So reason I say that is because these industries that are out here have people paying for like putting their utilities on a credit report.
Yeah.
No need to do that, in my opinion. If you want to do that, but a lot of times they don't understand that they're just creating more expenses for themselves. Okay. So start off with that one credit card. If you got a car payment, pay those things on time over a period of time, and then add on. You should never add more than 2 accounts, in my opinion, a year. Okay. Yeah. But here's the deal. You can't live on credit. You have to make real money and to be able to service the debt, and don't put yourself in a predicament. How's that sound, Jared?
Yeah, sounds good.
Yeah. Last couple of things I want to show you, right? There's all types of different FICO, Fair Isaac Credit or Corporation. That's the company that came up with the FICO score, right? That's their formula. And there's a ton of different FICO scores and companies that have come up over the last 10 years or so to help you monitor your credit, right? But you need to go back to the CFPB and understand what it is that you're looking at when it comes to those FICO scores, right? And let's put that back on the screen. Again, this is a CFPB, guys. This is free, 99, and it's just going to take the time that you need to read. But what you need to know and understand is that when you come to apply for a mortgage in the mortgage industry, we're using the following. We're using the FICO scoring model number 2 for Experian, scoring model number 4 for TransUnion, and scoring model number 5 for Equifax. And the reason that's important is because a lot of these third-party sites and stuff that people go to, Jerry, they might be using a Vantage scoring model, right? A 3.0. They may have bought a car. There's a FICO scoring model for cars. So You got to compare apples to apples. That's what's most important. And the last thing they need to know about that is when you are qualifying or trying to get qualified for a mortgage, that's the most scrutinized score. Okay. And as you notice, the versions are very old because they got FICO 8, 9, and 10 now, right?
Yeah.
So again, just to recap, man, because you're starting off in this game as well as credit, right?
Mm-hmm.
What's the most important thing that you need to know about your credit score, Jerry, in your opinion?
Give me some context to that question.
So you have your credit score, right? You're
Huh?
establishing your trade lines and things of that nature, and
Mm-hmm.
you have a credit card and an auto loan. What's the most important thing about those two trade lines that you need to know and implement for your personal credit? What's the first thing that you need to know about credit? What must you do on time every time?
Oh, yeah, that was easy. I was working towards that, but
Yeah.
yeah, to pay your credit accounts on time.
Make your
Always.
payment
Always.
on time every time, right? Because that's what you
Mhm.
signed up for. Now that you made your payment on time every time on your credit card, what's the second thing you need to understand? You got a $10,000 limit. Should you spend all $10,000?
No. Limit yourself. Like,
Limit yourself.
yeah.
And just for folks that don't know, the people that have the highest credit scores use less than 9% of the available credit limit on their card.
Mm-hmm.
And they pay the balances off, right?
Yep.
Before they have to pay interest on it. So they're using the card, Jerry, for everyday purchases, not to
Mm-hmm.
go out and buy stuff that they feel like they could pay for.
Yep.
Amen? Yeah. And then the last thing, how much time is it going to take for you to really get some grown trade lines, man?
2 years.
2 years.
2 years.
That's the credit game.
Mm-hmm.
How many accounts should you open every year?
Max of 2 accounts per year.
2 accounts. So there you have it, guys. There you have it. From not only a young man, I'm not going to tell you his age, but he's young, right? He's also a mortgage loan originator on my team, and he's killing it. So that's to inspire you young folks out here, right? You don't have to be in debt, okay? But you do have to be responsible. And more importantly, you have to learn how to provide value, add value, okay? So he's a little shy. He gonna warm up as we do this more and more. But trust me, he's a monster.
Every time I meet new people, I'm always shy.
Yeah.
But once you get to know me,
he's a beast, y'all. He's a beast. So reach out to him. If you want to have a conversation, again, we want to push the conversation first, because once you make the decision to work with us, we don't want you having all of those tennis. You have the tennis game. You go, pow, pow. Make a decision. Yeah. If you choose us, we're going to choose you so we could go to work, because this is a very detailed process. The largest purchase that most grown folks will make in their lives. So you got to be very decisive, especially in this time. You know what, Jerry? If you got a few more minutes, man, let me. Can I share some data?
Yeah.
This is for all of you guys that are waiting on the sideline, right? Now, Jerry, have you ever heard of this? Men lie, women lie, but what doesn't? The numbers. The numbers don't lie. So what you're looking at, because Texas is our home state. We lend nationwide, but Texas is where we do 95% of our business, right?
Yep.
And so what you're looking at here, this comes from the Texas Association of Realtors, and we want to look at real data. And these are statewide, right? Texas quarterly housing reports. Because if you look online, Jerry, people are going to tell you, I'm waiting for the housing market to crash. Or a year and a half ago, the rates were 2%. And what happens is, really, you just got a bunch of people that never are really going to do anything, because just in your short time in the business, those 17 folks that we've looked at, you know what's the number one thing they weren't concerned about? The interest rate.
Yep.
They know and understand the community that you've tapped into knows and understand the importance of owning real estate.
Mm-hmm.
And they have great credit, and you notice they have money. Yeah. And they just want to purchase a property. To whereas a lot of other folks, they need a lot of numbers. So I like to show numbers, and here's the deal. So this is from 2021, and then I have 2022. Okay. And since you're down in the San Antonio area, let's do this. Let's pull up San Antonio. Okay, no, Antonio. All right. Did I spell that right? I don't want to go San Angelo.
You put double A. There you go.
There you go. Now, so here's the deal. This is how we look at this. So this is called a MSA, a metropolitan statistical area, and this is looking at the median house price, okay, first quarter 2021, and then the median house price. Did we not go there? Hold on. Let's do it over here too. All right. So median house price 2022, and then San Antonio, New Braunfels MSA. So now everybody's talking about they're waiting, right, Jerry?
Yep.
For the housing market to crash and to go down. Boy, this thing gonna give me a problem. Here we go. Now, so the median home price in first quarter last year, 2021, was 260. Now in 2022, it's 309.
Yeah.
So we don't have to get too deep. Is that going up or down?
Up.
That's going up, right?
Yeah, significantly
now,
at
significantly,
that.
Right? So anybody that purchased first quarter last year, you're already in the money.
Yep.
Right? But here's the deal. I don't talk about owning homes as if we're speculating, because there's a lot of gamblers out here like it's the crypto market.
Yeah.
The reason you want to buy a home, because homes are long-term investments, 10 plus years, right? Because it provides utility where you're going to live. But these numbers show that if you keep waiting, guess what? The prices are going up. Now, the median home price was 260 in 2021. So if we look over here, you see where I'm pointing, right? From 200 to 299. Guess what the biggest disruption is at? In that price range.
Yeah.
Right? Now, the higher you go up in price, the more comfortable you can get. There's not a lot of activity there, right?
Yeah.
And it's like everything in life, right? Because the majority of people live in this median house range. So now here's the last thing I want to show you, right? The months of inventory. Now, you can ask any of your realtors, but in a healthy real estate market, you got 3 to 4 months worth of inventory.
Yeah.
So this speaks to supply and demand. Remember, everybody's talking about all these foreclosures are coming on. The problem is there's a lack of inventory, Jerry, right? So now there's only 1.2 months in first quarter of 2021, and that was compared to 2022, right? I mean, 2020 to 2021. But watch this. Let's look over here. Even in that disruption, right? Same area where the disruption is at, but there's 1.1 months worth of inventory. So the supply has gone down.
Yep.
So now you got more people chasing the same houses. So guys, why did I go through that boring exercise? If you want to buy, let me look at you. And if Jerry's your jam, reach out to Jerry, right? Let's start the conversation and get on it, because you're listening to the wrong people. We don't get on here and pontificate about what we think, because this is what we do every day. We close a lot of loans, but we do it quietly, right?
Yeah.
You didn't see a Bentley, you see regular, and I purposely dress down because I just want you to hear what I have to say. Anybody listening to me is not coming because I'm out here capping, right? Because I could flex if I wanted to. That's not what I do, right? We want to help those that want to purchase real estate for the right reason. No disrespect. If you like the celebrity stuff, they got plenty of people out here for you. That's not what we do. We work hard. We give you the right advice and our professional opinion. Well, we'll put it like this. We give you the data that you need to help make the best decision for you and your family now and down after the sale. So if that's what you like, you want to build that relationship, not just for this transaction, for those down the line to come, because we career people over here, right? Reach out. Okay. Reach out to Geraldo at his IG, right? I'm going to put it back up one more time. And then while I'm putting him up, right, this is where you reach out to him. If you want to reach out to me, right, because we're all family, you can reach out to me and say, hey, how do I get to Geraldo? And I'm going to get you to him, right? or you can get to me at 210-570-6382. You can also text that number. Jerry, I think we hit it in the head, buddy. What you think?
Yeah, I think we did a pretty good job. Although one thing I do want to mention,
Go ahead,
is that if you're already in the transaction, let's talk about this, Mr. Rob. What do people want to stay away when they're already in the middle of their transaction when it comes to the credit?
What do they want to stay away from?
Yeah.
Now you got me thinking, man. I don't know where you want me to go with this. Give
Okay,
me a little bit more so I don't get the answer
so let's
wrong.
say a client comes to you, you get them pre-approved. They're pre-approved. They're looking to buy a house. They're under contract already, so they've gotten that far. And then something happens, and what's the number one thing that they don't want to mess up before they close on their transaction relating to credit?
You said it's pertaining to their credit or no?
Yeah.
What
are a lot of common people, because of their buying a house? What do they?
Go buy a car?
Yeah.
Or
they start buying furniture.
Or furniture. See, guys, he knows what time it is. He acting brand new. See, he got me trying to figure out what he's talking about. Don't get any new credit, right? Wait until you get the keys, guys. And I'm glad you said that, Jerry, because it's very important, because a lot of times, because they don't understand, right? We as folks in the profession aren't educating enough. But when you get pre-approved, that's just the beginning of the process.
Yeah.
So I don't want you to change jobs, because that happens a lot.
Yeah.
Don't buy your furniture in your house, because it's not your house until you close and fund and get the keys. Wait 30 days. And when you get the keys, then you could go shopping. Excellent question, man. Because we've had that pop up, right?
Yeah.
And I was saying to you, you'd be surprised how often this happens. And guys, here's the thing: everything's connected now. You're not going to get away with it. Okay. So deal with somebody that you know, like, and trust. Trust them. Trust your professional to get you to the finish line, and listen to them, right? Because if not, to your point, if you go buy a car, that's it in some cases. Because your DTI might be out of range. Now you're out of appraisal money. You might be out of earnest and option money, right? Somebody entrusted and gave you the opportunity to buy their house. They may need your sale to move on to the next house. Wait. Or before you do anything, what's better, reach out to Jerry, if he's your LO, myself, Christina, right? Anybody on the team, and ask before you do. That's an excellent question, bro. I'm glad you brought that up, man. Yeah. Anything else?
No. Again, if y'all are interested in purchasing home, if y'all are ready, reach out. They call me Suave out here because I can speak Spanish. So, mi gente, si están listos para comprar o refinanciar una casa, vayan a mi Instagram profile y hagan una consulta conmigo. Y
Dale. Yeah. Claro que sí. Yeah, there it is. No, let me that's mine. I'm sorry. I didn't mean to put that on there. So, hey guys, again, thank you for your time. Our time's up. Till the next time, next Tuesday, we'll be back on. And I think we're going to go over what you talked about, man. We're going to get into that documentation and get the people what they need about, preparing and giving them some tips so that when they reach out and they're ready, they can, have the best process possible.
Okay.
Sound good?
Yep.
All right. See you guys later.
Later.